So let's just go on with the question. So the question
So I wanted to know more about the one of liquidity.
about
Then
come again.
um, the one of liquidity, DOL. So my major stake is usually if I get my sell side liquidity,
Hmm.
I want to know where I will have a reversal.
Basically, drawn liquidity has to do with the swing points and also the fair value gaps you get.
Yes, sir. Yes, sir. Yes, sir.
So, and the one that basically leads to reversal are the ones at swing points. So here is our buy side liquidity. This is a swing point because you can see that this bullish candle is higher than these candles.
More than this one.
Yeah.
Yes, sir. Yes, sir.
Three candles should form your swing points. So the one
Yes,
that
sir.
gives the highest high gives you the high points. So the one that gives the
Yes,
lowest low gives you the swing low point. You get it?
yes,
You
sir.
see, this is a
Yes,
lower
sir.
high, this is a higher high, this is a lower high. So this is our swing point. You get it?
Yes.
Now you must understand that there is liquidity sweep and then there is liquidity run.
Okay.
Coming, sorry, like somebody wants to join this meeting. Let me see. So you must know that there is liquidity sweep and also there is liquidity run. Now you can see for this one now, price took out this buy side liquidity. What we have here is a liquidity run. Are you getting it?
Yes.
So because
Yes, sir.
this bullish candle closed above the swing high, so this is a liquidity run.
Yes.
Basically, you can say this is a break of structure because price closed above the swing point. Now, in this other example here, what you can see, we're having the bearish movement of price to the downside. Price created a swing low, and now we have the push of price to the upside. What you can see here is a liquidity run. This is a liquidity sweep. Why? Because the volume of this bullish candle did not close above the swing high points. So meaning you
Yes,
don't
sir.
have a break of structure here. What you have is a liquidity sweep.
Sweep. Yes, sir.
So price took out all form of stop orders resting at the swing high points. So you can see
Yes,
price
sir.
pushed to the upside, took out the liquidity,
Yes.
failed to close above it, and then we had the volume closing below the swing high.
Yes.
Getting it?
Yes, sir.
So this is your first signal for a possibility of a reversal. For this other example now, we'll be expecting to see continuation to the upside because why price broke the swing high, closed above it. So we could
Above it. Yes, sir.
back and then a continuation to the upside. You get it?
Yes, sir.
But for this one, what you're going
Yes,
to
sir.
see is that the market just took out the high with a wick, not the volume of the body closing above the swing high points.
Yes, sir.
You get? And then we now have the volume closed below the swing high points. So this is
High
when
point.
now
Yes.
you go back to the lower time frame. Are you getting it?
Yes, sir.
You spotted this occurrence in a daily time frame, then you can go to your 1 hour time frame. In your 1 hour time frame, you're going to see the possibility of a break of structure. You're going to see a candle body closing above. You get,
Yes, sir.
but you can
Yeah.
establish that from a higher time frame. For example, the daily time frame. You should know that
Yeah.
the daily time frame it is a sweep, not a run of the liquidity.
Hey, one.
You get it?
Yes, sir.
All right. So now you now establish how you want to take your trade execution now on the lower time frame because you identify already in the higher time frame that you have a sweep of this buy side liquidity. We just took out the liquidity, the high. We had the volume closing below the high. So the question you ask yourself now is this: the market took out the buy side liquidity. This is a reversal. Where do you think the market
Yeah.
is aiming towards?
The sell side liquidity.
Side. So the market is aiming to fill up any form of
Mm.
inefficiencies within this leg. And in a
Leg. Yeah.
you could see the market will take out the sell side liquidity, which is the swing
Mm.
low point. Now let's say for example you are in a weekly time frame and
Yeah.
you have this Monday, Tuesday, Wednesday, Thursday, Friday price movement. You get.
Yes, sir.
Now you can see here Tuesday gave us the week high, previous week high
We can.
point, and then
Yes.
Thursday gave us the previous week low point. This is now Monday, Tuesday, Wednesday, Thursday, Friday. Now
Yes.
they open, and then on Tuesday, you saw that the market took out the previous week low points.
Mhm. Yes.
You're getting it? The market took it out and then closed above it. That's the sweep of liquidity. You get?
Okay. So, okay. The market must take out the swing point and close above it.
Yes, if the market wants to reverse, the market will seek liquidity before it reverses. You get?
Yes, sir.
So
Yes, sir.
this failing to close below the previous week low points is trying to tell you that you should anticipate a possible reversal. So when you see a sweep of liquidity, also try and check what is a sponsorship candle the previous price delivery that is sponsoring that. You get.
Yes, sir.
We have the sweep of the previous week, and then you can see that the candle closed above the previous week low points. So what you now need to do is to anticipate the possibility of a reversal. So what you need to do is
Yeah.
to go to your lower time frames. Are you getting it? You know, in your lower
Yes,
time
sir.
frame, that is where you would see the market structure shift. You get.
Yes, sir.
That is where
Yes,
you
sir.
utilize to see your market structure shift. So
Yes, sir.
now you can see now the market swept the sell side liquidity, which is the previous
Liquidity.
week low point. Now
Yes, sir.
you can see the bullish move. Where's the market aiming towards? The buy side liquidity.
Yes, sir.
When you look at this other example, we have the Monday, Tuesday, Wednesday, Thursday, and Friday candle. We have the
Right.
previous week high and we have the previous week low. You can see we have
Yeah.
a delivery to the downside. Now price
Yes.
back to the upside. Now what you can see is that the market pulled back to the upside, mitigated this order block. Are you seeing it?
Yes. I'm seeing
So
it.
price mitigated this order block, and now you're seeing this bearish candle to the downside. This bearish candle engulfed the bullish candle. This bearish candle, the volume closed below the low of the previous candlestick.
Day.
Are you getting it?
Yeah.
Yeah,
Yes, sir.
previous day. Price is not seeking the buy side liquidity. Price mitigated this order block. Possibly we had the fall of price to the downside. Price pull back into premium. Are you getting it?
Yes, sir.
Now we are seeing
Yes, sir.
the market now. The draw on liquidity is the swing low point because you have a
Yes.
mitigation of the order block. So market is seeking
Yes.
to take out the sell side liquidity. From the last weekly forecast, I expected more push of price into this zone because I identified a rejection block and they wanted to see the bearish move. So now what you can see here
Yes.
is price not mitigate that bearish order block. So we now have this fall of price to the downside. So I anticipated to see further push of price for price to possibly fill up this fair value gap. But now what we can see is price took out the low of this
Yes.
bearish candle, failed to close
Yes.
below the low, it closed above the low. So you can see here is a
Yes.
consolidation. We're having a consolidation here. So
Yeah.
now, since what we have already, we have a sweep of liquidity here, and price is failing to take out
Yes.
this low. So then I just anticipated that the possibilities that the market wants to go bullish. Since we're having that, the consolidation is failing to take out this low point. Rather, market is taking
Yes.
out the highs. I get in it. Market is
High.
taking out
Yeah.
the highs.
Yeah.
And what you can see here, market took out this high. So price took out
Yeah.
this sell side liquidity, pushed to the upside. Price returned, failed to take out this. So
Yes.
I'm anticipating more bearish. But then since I saw this candle closed above this, so my expectation was to see a return of price to mitigate this week, and then we have that bullish move. You get
Yes.
it? So now where's the next drop on liquidity? We're looking forward to see that the market will sweep this high point. This is now our next drop on liquidity. You have to see what the market is failing to do so that you know where the market is heading to. Market failed to take out this low. Rather, the price took out the high. Let me enlarge this. What we have here is a sweep of this high. Now price came to the down. Now the next candle
Yeah.
will fail to take the movement to the downside. Are you seeing it?
One side. Yeah.
So the
Yes,
market
I'm
took
seeing
out
it.
the previous day low. It took out the previous day.
Yes, sir.
Then we had this bullish candle
Yeah.
to the upside. This bullish candle closed
Yeah.
above this high, also this high. You get it? So meaning you can see the market
Yes,
is
sir.
failing to take out this low. It's failing to continue bearish
Yeah.
to the downside. So my expectation, what I
Yeah.
anticipated was to see this price falls to mitigate this week, and then we have the push of
Yes, sir.
price to the upside.
Pretty okay. Yeah.
So
I saw,
meaning
I saw it.
now the market is seeking this buy side liquidity.
Yeah.
If this candle will close above the mean threshold of this
Oh,
bearish order block, then we should know that there's a
yes.
possibility that it will go further and take out this high. You get it?
Yes, we are together. Yeah.
So this is how you look at your expectation on the next draw on liquidity.